foreign flows will improve this year, and that's the belief coming in from the brokerages. And the tilt seems to be in the favor of financials as well as domestic economy related players. Let's break it down for our viewers then what these brokerages are saying about India right now. And for this, let's go across to my colleague Somit Sarkar, who is joining us with all those details. Take it away, Somit.
Jefferies is firstly saying is that the multi-year capex cycle is expected to continue. They are expecting foreign flows to continue in India even in calendar year 2024. As per sector, they are saying that banks offer the best risk-reward ratio, while the relative valuations are not that expensive. Now, if you see the Nifty 12-month forward P, that stands at around 20 times. Now, this is higher than the past 10-year average, but it is just at a premium of 67% compared to the emerging market basket, which is largely at par with what it was trading earlier. Now, Citi is saying that there might be some slowdown when it comes to mutual fund flows because as per their economists, the household savings are now getting exhausted. They are expecting the EPS of Nifty to grow at around 17 to 20% for FY24 and around 14 to 15% for FY25. They are also saying that the valuations are not that expensive and they are preferring large caps over mid cap and small cap for 2024. Lastly, when it comes to Bernstein, they are saying that valuations have inched up, making it challenging to find convicting ideas with conviction, which according to them is a sign of market peaking out. They are saying that earnings growth would be around mid-teens, and they are not expecting any surprises on the upside. When it comes to valuations, they are saying that small and mid cap are trading at the highest premium to the large cap in the last 15 years. And though they are positive on the macros, they are advising investors to book profits at this stage. Now, when it comes to the Nifty target for December 2024 end, Jefferies has a target of close to 24,000, which suggests an upside of around 12%. Citi has a target of close to 22,500, while Bernstein has a target of close to 23,500. And when it comes to stock and sector specific picks, Jefferies has given a host of stocks which include Axis Bank, ICICI Bank, Macrotech, Godrej Properties, Coal India, Eicher Motors, Bharti Airtel, Adani Ports and Kajaria Ceramics. Citi, on the other hand, has given 5 contrarian bets which include HDFC Bank, Cipla, Devyani, Industars and Endurance Tech, while they're overweight on PSU, utilities, defense, industrials, banks and insurance companies, while they're underweight when it comes to consumer discretionary, IT and metals. When it comes to Bernstein, a host of changes in the sectors. They have downgraded mid and small cap on a relative basis. When it comes to large cap, they have upgraded IT services and telecom to overweight. They have downgraded consumer tech to equal weight, while their overweight call remains on financials and healthcare. When it comes to metal, they have also upgraded that counter to an equal weight rating. They have downgraded consumer tech, real estate and cement to equal weight rating, while in consumers and industrials and utilities, they are focusing on select stocks. So that's a host of stocks coming in from major foreign brokerages for calendar year 2024.
Thank you so much for that, Somit, for putting all of that into context. What basically brokerages are saying when it comes to the Indian markets, what's their outlook coming in for the year 2024. But let's pose that question then to our experts today. We have Kunal Bothra as well as Vivek Karwa joining us on the show. Firstly, Happy New Year to both of you all. Thank you so much for joining us on Buy Now Sell Now. Vivek, let me come first to you and ask your take. Which are the sectors that you are bullish on when it comes to the year 2024, and what's your view coming in for the index? Do you think, given the fact that we've seen that rapid rally that the markets actually posed towards the latter half of the year 2023 will now actually take a pause, and which are the sectors that you think will stand to benefit going ahead?
Shirel, Kunal and Srishti, Happy New Year to all of you, and also to all the viewers. So this is the first show of 2024. Now, see, I feel these brokerages are late because sitting in India, we know that it is going to be India's decade for next 7 to 10 years. I think India is going to be the market which is going to outperform all other world markets going forward. Saying that, see, I am bullish. I am quite bullish on the markets. And firstly, coming to your taking a pause, I think markets should take small pause post-elections. So I'm thinking somewhere in June, there might be a small correction once new government is formed. And that would again throw up an opportunity to everyone who have missed the rally. Regarding sectors, I am quite bullish on defense. I like healthcare, banking and financial services. I am quite bullish. I've been mentioning that many times. And also pharma. So these 4 sectors, I think, should give you enough money to retire rich over next 5 to 7 years minimum.
Okay, so those are the sectors that Vivek is bullish on. But Kunal, coming to you, first of all, what's your target coming in for Nifty 50 for this particular year, as well as which sectors and stocks will be on your focus list, given this year that we have a lot of factors that will be at play. It's the election year, budget is around. So what's your sense on that?
So, good morning first of all, and my sense is that the index targets which I'm looking out for is at least another 20% upside from current levels, which means that my expectation is closer to 25 K on the Nifty, and my also belief is that the bank Nifty and the banking index could make a very strong and a dramatic comeback. We've already seen the bank Nifty doing pretty well over the last 1.5 odd month, but it's been a late recovery for bank Nifty as compared to many of the other sectors which generally have played a leading role into a market rally. But this time around, I would probably sense that bank Nifty could probably play a leading role towards the index benchmark indices moving up significantly higher. Now, in the aspect of sectoral outperformances, my sense is that when the market gets into a broad-based rally, when bull markets shape up into second, 2-tier, 3-tier up moves for themselves, we expect the rally to be a bit more broad-based, like what we've already seen in the last 3-4 months. PSUs, pharmas, real estate, many of these stocks, high beta, low beta, they have done exceptionally well for themselves. The only difference which I believe could probably happen going forward is the strong comeback of large cap stocks which have been huge underperformers.